So you've been in a very high-profile legal battle with the SEC for almost 2 years. Both sides have now asked a federal judge to make a call on whether XRP is indeed a security that falls under the purview of the SEC. My question to you is, why now, and why are you foregoing the right to go through a trial and present more evidence? Why are you so sure that everything is already out there?
Yes, welcome back everybody to Altcoin Daily. My name's Austin. The CEO of Ripple, Brad Garlinghouse, just went on CNBC's Crypto World this morning to give his final thoughts on XRP, the lawsuit versus the SEC, and his final thoughts to XRP holders as this case hopefully comes to an end. So in today's video, I want to discuss this, as well as the latest Bitcoin news, what's happening with the price, as well as a few other news stories that you should know as an investor. So like always, check the timestamps down below. And let's start with this first of two clips I want to share with you of Brad Garlinghouse summing up where Ripple stands right now with this lawsuit. And by the way, it all comes down to the Howey test. And just to clue everybody in, what are the 4 elements of the Howey test? And by the way, this was a piece of regulation enacted well before the internet, let alone well before cryptocurrency, back in 1933, to distinguish, is something an unregistered security? So the 4 elements of this Howey test are: is there an investment of money in a common enterprise with the expectation of profit to be derived from the effort of others? Now, the SEC argues that yes, there was a clear investment of money in the common enterprise of Ripple, the centralized company, with the expectation that based on their efforts, the XRP price would go up. That's the SEC stance. Ripple's stance, in a very simplified way, is there was no contract with the average retail investor of an investment of money, so the Howey test for XRP shouldn't stand. Listen to this first about 90-second clip of Brad Garlinghouse summing up how this stands right now. Watch this.
So trials are really reserved for like when there's a question of fact, and so juries and judges are like, what are the actual facts? In this case, the facts are pretty clear. The question is about the law, and we think the law is clear, and the law requires, and the statute as written by Congress, the law requires that there's an investment contract. That's step one. Before you even get to the Howey test, which is often talked about, you have to have a contract between two parties. We don't even think we get past that step, because an investment contract, if you don't have an investment contract, you certainly don't have a security because there's no agreement, period. If you get to the Howey test, then it's also a question of law. So we think this step of summary judgment is, first of all, the fastest path to resolution. We have been pushing very hard to move this quickly, partly because we think the law is clear, and partly because we think the whole industry needs the clarity we're seeking.
Yeah, and I definitely want to come back to the broader implications for the crypto industry. But on that point of an investment contract, the SEC has made the case in its motion that that there can be an investment contract without a contract, any rights granted to the purchaser and without any obligations to the issuer. What do you say to that?
In order to have a contract, you have two parties. No matter how the SEC wants to spin the facts, the reality is to have a contract, you have two parties have to agree on something. You don't necessarily have it written. You can have oral contracts, you can have implicit contracts, but you have to have two parties. The reality is there are not two parties. Ripple doesn't know who bought the XRP. The people who bought the XRP don't necessarily know Ripple. You have to remember that 99.9% of XRP trading has nothing to do with Ripple, the company. So when you talk about, okay, XRP is a security, I go back to something I said years ago when this started. A security of what company? Of what, like, who is the owner? So I think it's very clear there is no investment contract. If you get past the investment contract, which I think is hard, across the Howey test, you also don't have, you have to meet all 3 prongs. And in the case of the XRP case, you can't meet all 3 prongs for sure. And so we think that the judge will see that the law is very clear. We think the facts are very clear. And we think this is just a gross overreach of the SEC trying to wrest control of that uncertainty that has existed. And really the unfortunate thing is the SEC and really the US government hasn't taken this step to provide that clarity that a lot of other countries around the world have.
Okay, give me your thoughts on what Brad Garlinghouse just said down below. Especially if you hold XRP, what do you think? Let's all check the comment section together. But what I like that Brad said is it really just comes down to the courts now. The SEC says one thing, Ripple says another thing. All the facts seem to be there. We're all now just waiting on some clarity. And before we talk about the Bitcoin price and get to a few other pieces of major news today, let me share with you this final clip of Brad Garlinghouse explaining that the biggest shame in all this is that we're having the SEC make the laws. Listen to Brad Garlinghouse call the SEC a bully, as well as what he hopes to set some new precedent for the crypto industry as a whole. Watch this.
I would characterize the SEC has built a reputation I think is deserved as being a bully. Many players that the SEC has gone after, they simply have to fold their cards. I mean, Ripple will spend well over $100 million defending ourselves in a case that we have tried to move forward as quickly as we can, and the SEC has gone as slowly as they can. Way back when I first got involved with technology in the late 90s, the government took the step to clarify what are the rules of the road for the internet. And all kinds of capital flowed in, all kinds of entrepreneurs flowed in, and we saw an amazing explosion of activity and innovation, and that's amazing. And frankly, the US has benefited massively on a geopolitical basis from that. We haven't done that work here, and instead, particularly the SEC, is trying to regulate through enforcement.
Yeah.
That's a super inefficient way to do this, as opposed to let's do the work, let's provide the clarity. And I think the executive order is an example of taking that step. And I think that, as you mentioned, the bills pending and that have been introduced, we'll see where they go, one in the House, one in the Senate, I think are positive steps in that direction.
I mean, that buzz phrase of regulation by enforcement is something that a lot of people have been talking about with respect to the SEC stepping in and making rules just by virtue of retroactively holding people accountable for things that they didn't realize were a mistake in the first place or were an issue in the first place. So a lot of people are looking to this lawsuit between Ripple and SEC as a moment of setting precedent for the wider industry. Walk us through what that looks like, based off of like the hypotheticals of how the judge rules.
Well, so I do think, as you say, I think it's a pretty bellwether case at this point. And we talked about, the Howey test is this orange grove for a Supreme Court case in the 40s. I think the Ripple test may be what we look at in the future. And
okay, by the end of this year, hopefully, we should be getting closure on this lawsuit one way or another. But next up, let's talk about Bitcoin, the obvious market mover. If Bitcoin goes up, it usually carries the altcoins. When Bitcoin tanks, it carries the altcoins the same. So for Bitcoin, there are more woes for Grayscale investors as the largest Bitcoin fund, GBTC, again hits new all-time lows. Grayscale's Bitcoin Trust is now trading at a record discount of more than 35% compared to the value of the underlying asset. So essentially what that means is, looking at GBTC trading at, like I said, a 35% discount, while on the open market right now, you can buy one Bitcoin for around $19,000. You can also buy one Bitcoin from Grayscale at a 35% discount, so roughly around $12,000. If Bitcoin dipped to $12,000 right now, would you buy? Well, technically, that option is available right now for Wall Street investors, and they're not picking up the discount. Now, again, what is GBTC? It's essentially a trust that buys the Bitcoin, and then Wall Street investors, instead of having to buy Bitcoin themselves and worry about custody and management, they can just buy the ticker, and that's an indirect way for them to buy the Bitcoin themselves, and then Grayscale will handle the custody and management themselves. Now, what this means for you and me as average Bitcoin investors is I would not expect the price of regular Bitcoin, the underlying asset, to get bought up if we're not seeing Wall Street investors right now buy up this discount in GBTC. Anyway, point is, let me just get to the point. Point is, this is just a metric we're going to have to keep coming back to, keep tabs on, because this could be one of the signals when we eventually switch from bear market to bull. And by the way, even though prices are trending lower, the building, the plumbing that are being put into place right now is only getting bigger. Disney seeks a corporate lawyer for emerging technologies and NFTs. So according to a September 23rd listing on Disney's website, they are seeking an experienced corporate attorney to work on transactions involving emerging technologies, including NFTs, blockchain, the metaverse, and decentralized finance. This is Disney. This is a company with probably some of the biggest IP in the world getting into the metaverse. For me, what this means is this next decade for cryptocurrency is going to be a whole lot bigger compared to where we are today. All right, that is the video. My name is Austin, and like always, see you tomorrow. Appreciate you.